Enterprise Finance Daily Banking, Risk, and Corporate Market Insights. August 7, 2026 edition. Tagline: Daily AI-powered insights for finance professionals, investors, and enterprise decision-makers. Headline: The AI Finance Acceleration, Why Banks, Markets, and Enterprise Capital Are Entering a New Growth Cycle. Disclaimer: News only. Not legal, financial, medical, or official advice. Anecdotal examples are informational and should not be treated as advice. Podcast/video format, 10 to 15 minutes. Story 1: Corporate Finance and Banking. Enterprise Treasury goes real-time, the quiet payments revolution that could reshape corporate cash management. The most significant development emerging across corporate finance circles is the accelerating shift toward real-time treasury operations driven by instant payment networks and modern settlement infrastructure. Financial institutions are increasingly positioning real-time payments not as a customer convenience feature, but as a foundational balance sheet efficiency tool for corporate clients. Industry reporting indicates that banks are investing heavily in instant settlement capabilities, enabling businesses to manage liquidity with significantly greater precision while reducing delays associated with traditional payment cycles. Corporate finance teams are focusing on working capital optimization as elevated interest rate environments continue to place a premium on efficient cash deployment. Payment velocity is becoming a strategic metric rather than simply an operational measurement, creating new competition among banks seeking to differentiate corporate offerings. Analysts increasingly view treasury modernization as one of the most important enterprise banking themes of the decade. Fintech boom. For multinational corporations, the implications extend beyond payments. Faster settlement enables more dynamic forecasting, improved supplier relationships, better visibility into cash positions, and greater flexibility during periods of market volatility. Treasury executives are evaluating whether legacy processes built around multi-day settlement windows remain suited for the emerging financial landscape. As enterprise resource planning systems become increasingly integrated with banking infrastructure, finance departments are moving toward always-on liquidity management models. The result is a closer alignment between operational activity and capital allocation decisions. This evolution is pushing banks to redesign commercial products around data-driven treasury intelligence rather than traditional transaction processing alone. The competitive battleground is increasingly becoming the quality of financial insight delivered alongside payment services. Fintech boom. Looking ahead, many futurists see today's treasury modernization efforts as an early foundation for highly automated global commerce networks. While practical enterprise needs remain the primary driver, the technologies being deployed today could eventually support economic systems operating continuously across continents, orbital infrastructure, and future space-based industrial ecosystems. That vision remains speculative, yet the underlying architecture being built by banks and corporate finance organizations is undeniably more real-time, more connected, and more intelligent than the systems it replaces. The immediate opportunity remains grounded in improved efficiency, stronger liquidity management, and enhanced resilience. For finance leaders, the question is increasingly not whether to modernize treasury operations, but how rapidly transformation can occur while maintaining governance and control. Subtopic: Commercial Banking Modernization. Commercial banks are increasingly redesigning services around digital operating models where payments, liquidity, lending, cash forecasting, and risk monitoring exist within a unified technology environment, creating a finance ecosystem that delivers greater visibility and faster decision-making while helping businesses manage growth, uncertainty, and capital efficiency more effectively in an increasingly interconnected global economy. Story 2: Fintech and RegTech. Stablecoins, compliance automation, and embedded finance. Why the next fintech boom looks more institutional than revolutionary. Fintech's latest growth phase is being driven less by consumer disruption and more by enterprise deployment. Industry analysis suggests that regulated stablecoins, embedded finance platforms, and compliance automation tools are increasingly penetrating mainstream financial infrastructure. What once appeared experimental is steadily becoming operational. Stablecoins are attracting interest from corporate treasury groups, transaction banks, and cross-border payment providers seeking lower friction movement of funds. Regulatory clarity in major jurisdictions is giving institutions greater confidence to evaluate adoption strategies while maintaining risk controls. The focus has shifted from speculation toward operational utility and measurable business outcomes. Fintech Bloom. +1. Simultaneously, RegTech platforms are benefiting from rising compliance complexity. Financial institutions face growing reporting obligations, governance expectations, cybersecurity requirements, and AI oversight responsibilities. As a result, automated compliance systems are achieving stronger executive sponsorship and larger enterprise budgets. Firms increasingly view regulatory technology not as a cost center, but as an efficiency layer capable of reducing operational risk while improving audit readiness. This shift is attracting investor attention because compliance capabilities are becoming deeply integrated into core workflows rather than remaining peripheral software tools. The long-term result may be financial institutions capable of responding to regulatory change with greater speed and precision. Fintech Profile. +1. The most promising trend may be the convergence of payments, compliance, and AI. Instead of treating these as separate technology investments, leading firms are integrating them into unified operating frameworks. The companies succeeding in this environment are often those emphasizing transparency, governance, explainability, and measurable efficiency gains. From a human-centric perspective, the objective is not eliminating financial professionals, but allowing them to focus on higher-value activities. Optimists argue that this evolution could unlock more accessible financial services globally while reducing friction for businesses and consumers alike. Datagate. Subtopic: Regulatory technology expansion. RegTech providers are increasingly positioning compliance software as strategic infrastructure rather than support tooling, helping institutions automate reporting, strengthen governance, improve auditability, monitor emerging AI-related obligations, identify operational vulnerabilities sooner, and maintain regulatory readiness in an environment where complexity continues to rise across the global financial sector. Story 3: Risk Management and Insurance. The age of AI-driven risk intelligence, how institutions are turning uncertainty into competitive advantage. Risk management is undergoing one of its most significant transformations since the digitization of banking. Financial institutions are increasingly deploying AI-enabled systems to identify fraud, monitor operational exposures, detect unusual transaction behavior, and improve decision speed. According to industry commentary, AI-driven risk platforms are moving from pilot programs into production environments as organizations search for greater efficiency and resilience. Financial firms remain cautious because regulatory scrutiny and governance requirements continue to expand, yet the momentum toward intelligent risk systems remains substantial. Institutions face growing pressure to manage cyber threats, market volatility, compliance obligations, and interconnected operational risks simultaneously. Traditional approaches alone are proving insufficient in increasingly complex digital ecosystems. Datagate. +1. The insurance sector is experiencing related changes. Carriers are reevaluating underwriting models, claims operations, and risk assessment methodologies through the lens of automation and advanced analytics. Executives increasingly emphasize resilience and adaptability over simple cost reduction. Modern insurance strategies focus on anticipating emerging threats before losses occur rather than merely responding afterward. This approach aligns with broader enterprise risk priorities that place greater value on preventive intelligence and continuous monitoring. The result is a convergence between financial risk management and insurance innovation. Fintech Profile. From a broader societal perspective, improved risk analytics can support economic stability by helping organizations identify vulnerabilities earlier and allocate capital more effectively. While perfect prediction remains impossible, advances in data science continue improving visibility into complex systems. Future financial ecosystems may rely on collaborative networks of AI systems, human experts, and real-time data platforms working together to strengthen resilience. The optimistic view is that technology becomes a force multiplier for human judgment rather than a replacement for it. That balance between innovation and oversight remains one of the defining themes of modern risk management. Datagate. Subtopic: Insurance Sector Transformation. Insurance leaders increasingly believe future competitive advantage will come from combining predictive analytics, automation, resilience planning, cyber risk assessment, climate-related modeling, and continuously updated underwriting intelligence to create more adaptive organizations capable of responding effectively to rapidly evolving risk conditions in both physical and digital environments. Story 4: Investment and Capital Markets. Capital flows follow quality. Why investors are rewarding scalable finance platforms again. Capital markets continue to favor businesses demonstrating operational discipline, scalable platforms, and clear paths to profitability. Recent industry observations indicate that investor capital is becoming more selective, with larger funding rounds increasingly concentrated among firms capable of combining innovation with measurable financial performance. This environment benefits financial technology companies that have successfully moved beyond experimentation into substantial commercial deployment. Investors are paying close attention to infrastructure providers, payments companies, AI enablement platforms, and enterprise financial software businesses. The emphasis has shifted toward sustainability and execution rather than growth at any cost. Wall Street's economists. Market participants are also monitoring the growing influence of automation across trading, portfolio management, and market-making activity. AI-supported workflows are becoming increasingly prominent throughout financial markets. While regulators and institutions continue evaluating governance frameworks, adoption trends suggest that advanced analytics and automation will remain important drivers of future market structure evolution. Investors view data quality, model oversight, and internal controls as critical differentiators. Organizations capable of balancing innovation with risk management are often viewed more favorably than those pursuing aggressive technology adoption without governance discipline. Datagate. +1. For long-term investors, the current period may eventually be remembered as an inflection point in financial modernization. The infrastructure supporting capital allocation is becoming more intelligent, interconnected, and data-driven. Opportunities remain accompanied by risks, yet optimism persists regarding the capacity of technology to improve efficiency and transparency across markets. The future likely belongs to firms that combine technological sophistication with sound fundamentals. In an era increasingly shaped by AI, trust remains one of the most valuable assets in finance. Wall Street's economists. Subtopic: Funding Trends. Venture and institutional investors are increasingly directing capital toward companies demonstrating strong governance, scalable technology architectures, sustainable revenue models, clear commercialization pathways, and practical applications of AI that solve real financial industry challenges rather than relying solely on speculative narratives or short-term market enthusiasm. Story 5: AI and Data Analytics in Finance. Autonomous finance emerges, the AI agents quietly reshaping banking operations. Artificial intelligence remains the dominant strategic discussion within financial services. Industry commentary suggests that AI adoption has entered a more mature phase characterized by deployment, governance, integration, and accountability rather than experimentation alone. Banks are embedding intelligent systems into customer service, compliance, fraud detection, financial planning, and operational workflows. The focus increasingly centers on generating measurable outcomes rather than showcasing technological novelty. Institutions are prioritizing data quality and control frameworks as they seek to scale deployments responsibly. AI is becoming part of the operating foundation of modern finance rather than an isolated innovation initiative. ProTrader Daily. +1. A notable trend involves the rise of autonomous and semi-autonomous AI agents capable of coordinating workflows across multiple functions. Financial institutions are exploring systems that assist with monitoring, reporting, analysis, and decision support. These technologies promise productivity gains while also raising important questions regarding governance, transparency, accountability, and regulatory compliance. Industry leaders increasingly recognize that successful deployment depends as much on organizational readiness and oversight mechanisms as on model performance itself. Trustworthy AI is emerging as a strategic requirement rather than a marketing slogan. Datagate. +1. The broader significance lies in the possibility that finance could become one of the first sectors to operate with deeply integrated human-AI collaboration at enterprise scale. This transformation supports a future in which professionals spend less time gathering information and more time applying judgment, creativity, and strategic thinking. Looking decades ahead, such capabilities could support the financial coordination required for increasingly ambitious human endeavors, including advanced scientific infrastructure and off-world economic activity. For now, however, the story remains firmly grounded in operational excellence, better customer experiences, and smarter decision-making. Datagate. +1. Subtopic: Data infrastructure becomes strategic. Finance executives increasingly view data quality, governance, interoperability, observability, security, lineage tracking, and enterprise-wide accessibility as essential prerequisites for successful AI adoption. Recognizing that advanced models can only deliver reliable outcomes when supported by trusted, well-managed, and highly resilient information infrastructure. YouTube/podcast description. Welcome to Enterprise Finance Daily, your AI-powered briefing covering the biggest developments across corporate banking, fintech, risk management, capital markets, and financial AI. In today's deep dive edition, we explore treasury modernization, stablecoin adoption, compliance automation, insurance transformation, investment trends, and the rapid rise of AI-driven financial operations shaping tomorrow's economy.
Geotags.
Hashtag Enterprise Finance, hashtag Banking News, hashtag Finance News, hashtag Corporate Banking, hashtag Investment Markets, hashtag Capital Markets, hashtag Fintech, hashtag RegTech, hashtag Risk Management, hashtag Insurance Industry, hashtag Artificial Intelligence, hashtag AI Finance, hashtag Financial Technology, hashtag Stablecoins, hashtag Digital Payments, hashtag Treasury Management, hashtag Financial Services, hashtag Data Analytics, hashtag Market Insights, hashtag Institutional Investing, hashtag Future of Banking, hashtag Economic Outlook, hashtag Business News, hashtag Fintech Innovation, hashtag Enterprise AI. Base thumbnail. Headline: AI is rewiring global finance. Visual: futuristic trading floor, glowing world map, AI neural network overlay, bank skyscrapers, upward market trend line, blue and gold professional color palette. Thumbnail A, B/C tests. Thumbnail A. Text: banks won't look like this in 5 years. Visual: traditional bank splitting into an AI-powered digital financial hub. Thumbnail B. Text: the dollar trillion finance shift has started. Visual: massive capital flow arrows moving through digital networks and global markets. Thumbnail C. Text: AI agents are taking over Wall Street. Visual: human analyst and advanced AI working side by side overlooking market dashboards. Suggested title: under 100 characters. Enterprise Finance Daily, AI, Banking, Markets, and Risk Outlook for August 7, 2026.